Hi folks, this is Sean Hyman, and I want to talk to you about the pound Aussie head and shoulders pattern in our chart of the day. There's a neckline that connects the low points in the head and shoulders pattern. It's a bearish pattern because you have a higher low, a higher high, another higher high, but then here you have a lower high, and this is where it becomes bearish. The pattern has to close below the neckline in order to complete and validate the pattern. And this is where some people will say, well, I just don't like the head and shoulders pattern because it doesn't always work. And my answer to that is it does always work if you use it in the ways prescribed, meaning that it'll give you an indication either way. If it goes below the neckline, which it does most of the time, and closes to where we have a lower high and a lower low that's closed, then we have a new downtrend starting, and the price projection will happen from the top of the head down to the neckline, which you see me project that length here, down from here down to there, down just shy of these lows here. And that's a minimum price target. Now, let's take the alternative scenario and let's go with the people that say that the head and shoulders patterns don't always work. If it comes down to the neckline and it does not complete, meaning it does not close a candle below here, not talking about a wick below, but closing a candle solidly below the neckline. So if it comes down here, holds, and bounces up and never comes back, if it takes out this high and closes above that, then you can take that as an indication to go back long and and go back to your old highs. Once it reaches there, you can move your stop up halfway between where you went long here and your initial first target of resistance here, and see if it blows through there. If it continues onward, of course, then you can move your stop up just shy of these highs as well. So with a head and shoulders, what I love about it is there really are two ways to play it. The head and shoulders failure play, which is where you would go long if it did not close below here, and then the traditional head and shoulders pattern that has to complete by breaking the neckline and closing below it, and then it runs down to its target. Now you have to, if it in the times when it does not complete and it heads this way, you don't have a price projection, but you can feel confident that it will, if it's bouncing up and resisting going lower, then it's just a sideways consolidation within the up move that wants to ultimately go higher. So you can feel quite confident that it would move back up around the old highs. And so you've got minimally, even on the smaller hourly time frame, 100 pips between here and here that you would have. So once it moves up to here, you can move your stop up, about 50 of those pips, protect about 50, and allow the other to ride once you see if the pair takes out the high. So either way, you've got a bullish play and you've got a bearish play and you've got a line in the sand. So that's what I like to see in a technical pattern. Now let me take the text off because I want to show you something else about some patterns that you will see sometimes. Let me pull this text box off. There we go. I'm going to divide this pattern. There we go. And you can see that it's almost like a pattern looking in a mirror. A lot of times there are geometric shapes and mirroring patterns that these things will do as well. You have this here, you have this here, which is where you get a double top. You have a move here that was fairly long, move here that was fairly long. And that doesn't mean exactly they have to emulate, but they're covering the basic same moves. Here you had a move upward, here you had a move upward, then a move downward. So if we break, we'll probably get some move similar to this as it was on the way up. It only took 3 or 4 candles to make it, a couple hundred pips or so, or even greater. You will likely see that if this breaks, it will have a big incentive it will most likely follow, just as this jolted up, this will likely bolt down and only take so many hours to complete to its downside. Now, in the event that that's wrong and it takes longer to trickle down, you can always move your stop, and like I say, it's still a valid, great play either way. But do keep in mind that when you see these mirroring shapes, when you see to where it seems to have about the same geometry, geometrical shape on each side, that a lot of times the corresponding move that happens will be mirrored in what we see here, not pip for pip or exactly 100% replicated, but a similar move happen as well. So that's something new that I like to point out when I see it. You don't find a lot of people teach you about those type of things, but I want my readers and my hearers at the chart of the day to be the most knowledgeable out there. And so that's the lesson for the chart of the day today. Thanks so much for watching.